Welcome back to Business Line. Every week we pick the brains of financial experts and industry people to talk to us about different kinds of investment options. We've already spoken in depth about mutual funds earlier on Business Line. This week we continue to dive in deeper into the subject, and joining us in the studio is the MD of Sundaram BNP Paribas, Mr. Raman. Thank you so much, Mr. Raman, for joining us this week.
Thank you.
Some people invest for investment's sake and some for tax-saving benefits. What kind of tax-saving MFs are out there?
There is only one option actually, or rather two. One option is a tax saver product, which most mutual funds have. It's titled the tax saver because it is under the ELSS scheme of the Government of India. So you take advantage under the income tax rules to the extent that you have that eligibility of 1 lakh and odd. But for really high net worth individuals, this may not be the kind of a product because they would have exhausted that provision any which way. But for a salaried person, this is of help because this is it has a 3-year lock-in, and it's an equity product. It is a 100% equity product, which generates decent returns over a 3-year period with some tax benefits. The other investment which I do in mutual funds today under the current tax laws, investments, the dividends that people receive from equity funds are tax-free, and the long-term gains after 12 months, it's not taxable. So from that perspective, also regular investments in regular mutual fund products over a 1 year plus time horizon is still tax efficient.
There are also mutual funds which claim to have an assured return guarantee. Do these really exist, and how do they work if they do?
Regulatorily, it is not permissible to use the word assured return. Regulatorily, it is also not permissible of late to use the word indicative return either, because this was some kind of a practice that was existing about a year ago in the fixed maturity plan things, but then the regulator has said that even this is not permissible. Mutual funds, the investments, whether it is equity or fixed income, will give you market related returns. So it is a ballpark idea that an investor can hope to have by saying that if the market is moving up 10% or 15%, hopefully his investment also must be doing the same thing. But for the fund house to say that this is the return that we will give is not possible, is not doable.
Let's say there are a few schemes in the same category of mutual funds. How does an investor go about deciding what to put his or her money into? Does it depend on the lower NAV?
See, NAV, my sincere recommendation is NAV should not be the criterion for putting your money in, because this misconception that the lower the NAV or around 10 rupees NAV, it is cheaper, really it doesn't help. Yeah, if a scheme has an NAV, but over a period of time it has fallen because of market conditions, if a person decides to take a call that let me invest it because the funds are falling, it's like a stock price. Now you take a particular stock, if it was priced around 400, and if it has fallen to 300, you can make a guess that this is a good stock, so it can move up till that 400, you take that bet. Similarly, for a fund house, if you look at an investment product, a mutual fund scheme, if you find that the NAV has fallen because of market conditions and there are prospects of it rising, yes, lower NAV makes sense. But per se, the lower NAV does not make sense because it is the rolling returns that really matters from now on. It is the moving returns that really matters. So I don't think people should be guided very much. Even if the NAV is 120 rupees, it's not going to matter because he is going to or she is going to invest it today, and from now on, whatever returns the fund is going to generate. So the way I would recommend our investors to look at is the track record of the fund. If it has been there for 5 years, 6 years, 10 years, there are funds which have been there for 10 years, for 5 years. Look at the track record. Look at the returns that it has given over that period of time. Look at the segment or the sectors or the nature of the fund. Now, is it thematic, like a mid cap or a small cap, or a rural or a infrastructure or an energy or a public sector opportunities, kind of a thing. If you look at the theme and if it appeals to them, put your money there.
But investors can get very wary just looking at the offer document. So what should one keep in mind when looking at this bulky document?
What you need to look at is what are the investment objectives of the scheme. Now, whatever scheme the person is deciding to put his money in, look at the investment objectives. What is it seeking to achieve? Is it saying that it is 100% equity, or it is partially equity, partially fixed income, what percentage, etc.? Then where is the investment going to be made? Is it going to be in the stocks or in the sectors that he is comfortable, the investor is comfortable with? The investment objectives is the key thing there. then look at the fund house, basically, which is the fund house that is making offer. The offer document will contain.
All right. Your company, Sundaram BNP Paribas, recently launched an IPO. How is it done till now?
This NFO was good. It was the public sector, opportunities unit, opportunities fund. It's a thematic fund aimed at, capturing the public sector theme, the disinvestment theme, the public sector units which are still not yet in the listed space, coming into the listed space. So it's a thematic fund which has which closed on December 24th. So it will reopen for the public. Again, it's an open-ended fund. It will reopen on January 18th. We have, collected close to 500 crores in that fund. So the accounting still is going on. So the NAV will be declared after January 18th.
All right.
Yeah.
Thank you so much, Mr. Raman, for joining us this week on Business Line. Business Line will be back after a short break, but before we go, a quick look at how the markets did this week. Mobile number portability on cell phones, which was to come into effect from the 1st of Jan this year, has been put off to March 31st, 2010. Number portability allows mobile users to shift service providers without having to change the number being used. Tech major TCS has indicated that it would step up the pace of hiring in 2010-11 as global tech spending picks up. Jindal Power filled its draft prospectus with the regulator to raise 7,200 crores from an IPO in the coming weeks. This will be the largest power IPO since Reliance Power's offer in January 2008. And retail investors who could not secure allotment in the scam-hit IPOs of 2003-05 may see some relief, with the SEBI readying proceedings to redistribute the gains made by the perpetrators of the scam to retail investors. Provisional figures for November 2009 show India's exports turning the corner. At a little over $13 billion, they posted an 18.2% growth after a long spell of negative growth. The markets closed the shortened trading week on an upbeat note, with the Sensex up 0.6% at 17,464 points.